Hi, I'm Victoria Stevens, and welcome to this podcast, Stock Exchanges. In my day job working as a fund manager at Lion Trust, investing on behalf of our clients in UK stock market listed companies, I'm fortunate enough to cross paths with some of Britain's most inspiring entrepreneurs. It's a huge privilege to sit across the table from the people who've put their heart and soul into growing and running companies. And in this series, I want to share that privilege with you, our listeners. Now, many listeners are likely to have ordered a pizza from Domino's from time to time, but might be less familiar with how the global Domino's franchising empire works. Domino's opened its first store in the United States in 1960, and it's now the largest pizza delivery operator in the world. The American Domino's Pizza Inc. is listed in New York and is the master franchisor for different territories around the world. Today, I'm joined by Andrew Rennie, the chief executive of Domino's Pizza Group, the London-listed company which holds the master franchise agreement for the UK and Ireland and has over 1,300 mostly franchised stores under its banner. Andrew's a true Domino's veteran, having started out as a franchisee himself in Australia, growing his mini empire to include 13 franchise stores within 10 years. And he then joined the Sydney-listed corporate entity, Domino's Pizza Enterprises, spending over 2 decades with the group, during which time its market capitalisation grew from 132 million Aussie dollars to almost 6 billion. Now, Andrew retired in 2020 to his farm in Australia, but as a self-confessed work addict, the life of leisure didn't last for long, and he was persuaded to return to the Domino's empire as CEO of the UK PLC last year, a move that was met with enthusiasm by investors given his experience. Andrew, it's great to have you on the podcast today, and thank you so much for joining me.
Thanks, Victoria. I really appreciate you having me. Thanks very much.
Why don't we start at the beginning? So you grew up in a small town in New South Wales in Australia. So can you tell us briefly about your formative years and how you initially came to take on a Domino's store?
Yeah, so you're right. I was born in a place called Wagga Wagga, which most people find very funny. It's in the bush. My father was actually a Scottish immigrant. He moved to Australia when he was 15 and was a shearer. So I grew up in a family that you only get paid for the amount of sheep you shear, so very much a work ethic, which still exists today with my father. So at the age of 15, I left school and joined the military and became an avionics technician. And during that time, I put a lot of the entrepreneurial skills together that my father had taught me. My brother and I had started our own business when we were 12, growing pigs for the local farmers for Christmas and Easter, etc. And then whilst I was in the military, I was building apartments, I was shearing sheep on weekends, and I was playing semi-professional rugby, getting paid, which was funding, property building, etc. So by the time I was 25, I had this real yearning to be in business full time, and looked around and realised that franchising was what I wanted to be into.
Perfect. And in terms of taking on that first store and then growing that empire, if I may call it that, to 13 stores, what do you think it was that made that so successful? You've talked about your work ethic. I've read that for you, customer service was absolutely paramount. So talk us through a little bit of that.
Yeah, I think the key here is a couple of things. The military taught me a lot about systems and processes and discipline. So that was really important, and I applied those principles with my team. And equally, the work ethic of my father and my mother played an important part. So I worked extremely hard. I read a book about great customer service, how it was a differentiator in so many businesses just before I took on the business. And one of the reasons why I had no choice but had to give amazing service was because the average Domino's store back then, which was actually called Silvio's, but bought the Domino's brand and converted to Domino's a few years later, we only had about 55 shops. Pizza Hut had 427. We were tiny. And the only territory available to me was a small town called Palmerston, which was near Darwin in the north of Australia. Now, the address count for that town only had 3,000 addresses. So in population terms, it was about 7,000 people. The average Silvio's/Domino's store at that time had 60,000. So I was 1/10 of the size of the population base. So I couldn't afford to lose one customer. So we used that military expertise, focus on customer service, and literally any customer that was given bad service or a bad product, which happens because 80% of our business happens in 20% of the time. It's very chaotic. Things can go wrong when you're making fresh product every single night. I would make sure I went and apologised myself, do whatever I can to make sure I didn't lose those customers. And that became our mantra. And we took that store and from the bottom of the sales, it was only doing $5,000 a week in 1994. And by late 1995, it was doing over $20,000 a week. It was the number one store in the country. So literally off customer service on 1/10 of the size of the other stores. So we did pretty well.
Yeah, absolutely. I'm going to digress for a moment there into that entrepreneurialism, I suppose, of the franchisees. Because I think, one of the issues historically for Domino's in the UK has been a level of tension between the corporate and the franchisees. So I wanted to ask how you think that it's helped that relationship with those franchisees, them knowing that you've been through it as well, you've been through those challenges, but also the opportunity, and you actually understand what they're going through.
Yeah, look, it's helped me a lot. I mean, we'll talk about it later in the European experience I had. But certainly being able to speak the same language as the franchisees. I've known a lot of the franchisees over 20 years in the UK because we used to always catch up together globally, share ideas. And I have nothing but respect for what they've done. They put their whole family's houses, life savings, and all of them started with one pizza store like myself. And most of them started as pizza delivery drivers. And built empires, and even far bigger empires than I built. And we've probably got some of the best Domino's franchisees globally, which says a lot about when you've got 21,000 stores globally, right? That some of the best, I would say some of the top 10 best franchisees are here in this country. So we're very fortunate. And I know people see the negative of having them too big, but the positive is they're such great operators. They have amazingly strong balance sheets, so we can weather tough times like COVID, etc. And they did, and their P&Ls are in a really good place, which is why I'm confident about the growth.
Absolutely. It's one thing that we really like about franchising businesses when we invest in them is that you almost get two bites at the cherry, if you like, in terms of entrepreneurialism, because you get the company itself and then you get all those different layers of entrepreneurialism coming through underneath from the franchisees. And for them, of course, that's their livelihoods.
That's spot on. And I think the reason that there may have been, there was a breakdown is just that the lack of understanding and appreciation for what they go through and the investment they put into their businesses, and it's their livelihoods. And the one thing I think that differentiates these franchisees from most others around the world is that they don't think about buying and selling, that they are generational. They've held these stores for, some of them getting close to 40 years. We're 40 years old next year in the UK. And their second generation, their children who are now 25, 35 are coming through wanting to run the business. And I think about the growth for the next 20, 30 years for those second generation. So that's a completely different mindset compared to a lot of other businesses where they're just there for 5 years to sell it and make a profit. These guys, majority of them don't think like that.
Yeah, absolutely. So maybe we move on to the next step of your journey. And I appreciate, it's difficult to sum up 2 decades of hard graft in a reasonably snappy answer here. But if you can tell us a little bit about how that opportunity came to pass, because in a sense you stopped empire building because, as I understand it, you were invited to join the corporate entity listed in Australia.
Yes, after about 10 years of being a franchisee, I was approached by Don, who was running the business, to do exactly what he and another gentleman, Grant, had done to basically trade their stores for stock, which was a private company in that stage. So I liked the idea of it because, effectively just opening another store to me was becoming sort of same. And I loved the idea of being part of the bigger mothership and growing the bigger business. So therefore they gave me the opportunity. I came on board, folded my stores in, which gave me a percentage of the business. I became the 4th shareholder in the business while we were private. And I headed up corporate stores, and we had about 100 corporate stores across Australia and New Zealand, and that was providing about half the profits of the business, which was just basically an Australian small New Zealand business at that stage. So we're talking 2003, 2004, and then we went public in 2005.
Right, understood. And then tell us very briefly about how that developed, because you moved around a bit, didn't you? You moved to Paris, or
yes.
you ran the French and Belgian businesses, then came back to Sydney to run the Australian New Zealand business, and then went back over to Europe.
Yes.
So tell us a little bit about that journey.
Yeah. So what happened was after we'd been listed for literally only a year, we discovered that this whole thing about being listed and public companies is it's all about the growth. And people considered that we were going to be ex-growth within sort of the next 5 years. At that stage, we thought Australia would get to circa 625 stores. Today, it's over 740, by the way. So therefore, we were looking to buy another brand. And the parent company came to us, and Don and Grant and I said, look, you guys are really good operators, some of our best in the world. We have an opportunity in Europe. We'd love for you to go there. And we know you're Australians, but we think your model of high volume mentality would work there. And the business had been in administration. The US had taken them out of administration. So we bought the rights to France, Belgium and the Netherlands. There was existing business there, 155 stores. And they looked around the room and said, who wants to go? And they said, does anyone speak French? I said, I can count to 10. Okay, that's enough, you can go. So I ran the French-Belgian business, and a good friend of mine, Andrew Rennie, ran the Dutch business, and we headed over there in 2006. And we took on the business, which at that stage it was effectively, if you loaded it up with royalties, etc., it was losing probably 3 or 4 million Aussie dollars a year in losses. And our job was to turn it around. And all we did was came in with our, I think, entrepreneurial approach and still franchisee mentality. The French guys weren't easy because they'd been through some tough times. But we had a couple of corporate stores and led by example, and effectively the average sales was only 10,000 euros a week in 2006. And the 2 corporate stores were doing like 6,000 and 8,000. And one of the stores I grabbed and we did 10,000 in one day. And just the franchisees' eyes bulged, how the hell did you do that? And they started to get their respect, and I was working very hard, which gained their respect as well. And literally over the next 4.5 years, we doubled the store count and tripled the sales, and the business was then making money. And then having a third child, so we decided we wanted to move back to Australia.
Understood. And we might come back when we talk about the UK business in terms of that mentality of improving store economics and how that can provide multiple levers for growth. So obviously you were extremely successful during your time at DPE, and as I said in my introduction, made that decision to retire 4 or 5 years ago now. So what catalysed the decision to retire in the first place?
Yeah, so by that stage, I'd been in the business a long time, as I said, almost 20 years in the parent company and 10 years before that. So it was not 30s, it was 27 years or something. So it was a long time. My family had been out of the country literally for a dozen years. So as you said, we'd gone back to Australia for 3 years, ran the Australian business, and then the chairman asked me to go back to Europe again in 2013, which I did. Helped turn the business around. We took on the German business and bought it off DPG. It took that from literally 20 stores losing a lot of money to 400 stores making a lot of money. One of my proud moments is sort of building the business plan for Germany and seeing it all execute as it should have, pretty well spot on, and also taking the French business, turning it around. So I'd been working very hard and travelling every week. I was actually living in the UK. My children were going to school here. My oldest son was actually working inside one of the biggest franchisee stores here. So I knew this business very well. I mean, not only did I know Domino's, but I knew the UK business and loved it. I always admired it. Had a cult-like following in the UK. Anyway, my family, it was time to go back to Australia, and I decided that after 27 years, I needed to have a rest. And I'd started to deploy my own wealth into other assets, farms, cheesecake shops, various things that I've got into.
Also a franchise business, isn't it?
Also a franchise business, also a car wash business. So I loved building businesses and helping turning them around and grow them. So I wanted to have that more time to do that. And it was also my successor was in place. I left at a good time, and Andre was able to step up. So, and it was fortuitously just before COVID broke out. So I'm very lucky.
So calling it retirement really isn't fair at all, is it?
No, my version,
it wasn't the life of leisure.
No, my version of retirement is probably different to most. I was working just as hard. I mean, I unfortunately, due to my father, I still wake up at 5, 6 a.m. every day, typically train in the gym and start work. So that didn't change.
And you just touched upon an interesting point that we've heard echoed from other entrepreneurs many times, which is, the toll on those around you that it takes to almost be behind that ambition. Obviously people look at very successful entrepreneurs and they think, wow, that's incredible. They've clearly put in a load of hard graft. But in terms of the support network that's needed behind that, the families that move all around the globe, that can be really tough, can't it?
Yeah, it was. Look, it definitely took a toll on my first marriage. My children, were very respectful and travelled. Fortunately, they've gained different languages. One of them is working in the Middle East now. One of them is back in Australia, and one is here in London, which is why I'm here. He's the youngest. He's 14. Look, it is tough. Yeah, but there's also upside as well. I think that creates resilience and grit in your children. So I also think there's a benefit to that.
Absolutely. So you've kind of hinted at it there in terms of what lured you back into Domino's, but I'd like to know, how did you make that decision to swing the bat again within the Domino's empire?
Yeah, so I had a board member reach out to me back in, must have been 22. Is there anything, after they'd lost Dominic, and said, is there anything we could do to sort of, because they'd approached me a few times in the previous sort of 10 years and it didn't suit because I was a DPE. I was very loyal. Anything we could do to get you off the bench? And I said, well, you might be in luck because my ex wants to move back to London with our son, which I'm supportive of. I'm not the sort of guy to sit around and do nothing, and I want to be near him. So literally we just had to wait to see that was confirmed, and it was. So they're happily at school here now and living here. So that brought me back. So I thought, okay, well, I'll have one more go, and this will be it until he graduates from high school.
Absolutely. So you've previously said, I think, that Domino's, the brand, is in your blood. And I personally was amazed when I first joined the team and we were already existing holders of Domino's. This is 10 years ago now. About just how big the share of the overall UK takeaway market is controlled by Domino's. So today, as I understand it, that's over 7%. And that's not just talking about pizza, that's talking about every takeaway that consumers in the UK order. I think that's an amazing stat, really. And one thing, when we spoke before, Andrew, I think that came through from our visit to your distribution centre is that, and I bet most people won't guess this, but what do you think the most popular day of the year is for Domino's? It's Boxing Day. And I thought that was just amazing because I thought, well, what are all these people doing with their leftover turkeys? Surely that should be New Year's Day or something. But it's an important point, and you've raised it before, in terms of coping with what are quite considerable peaks and troughs in demand, in terms of the challenge that presents to the franchisees in terms of keeping up that customer service.
Yeah, look, I think the testament to the quality of this brand goes right back to the founder, Tom Monaghan. He had a family mentality. He was really focused on the customer, and I've just perpetuated those, if you like. Never lose a customer. Really focusing on saving seconds. Like we're called, dominoids around the world. So there's over 150,000 dominoids, and most of them been the brand 20, 30, 40 years, like myself. You look at the franchisees we have here in the UK. I think the youngest one has probably been around 20 years. So that it really is in your blood. It's a brand that helps each other. We have a foundation called Partners Foundation where team members, franchisees donate to a fund, which is 100% of it goes to Domino's team members in need when they're having tough times, and we help them out in need, etc. So we don't talk about those things too much. We also sponsor the Teenage Cancer Trust. But it's a very giving organisation. Tom Monaghan himself was actually raised in a Catholic orphanage. His father passed away when he was young. His mother couldn't afford to raise he and his brother. So he a very stout Catholic, and he gave 90% of his wealth away to the Catholic Church effectively when he sold the business. And I think those values really play through Domino's globally. So we have incredible team members. We've got our over 35,000 staff in the UK, employees, our drivers, our riders, and I think 90% of our franchisee starters, pizza delivery drivers or riders. So the rags to riches story is very true inside Domino's, which I think is key to its success because they're people who started at the ground and worked their way up.
I mean, that came through, I think, in spades when I looked at your last annual report, and there was a Q&A that you had done within that annual report where I think you talked about there being a real ethos of opportunity and growth within the whole company, and that your story, while we see that and it's very visible because you're at the helm, actually isn't that unusual in terms of people going, as you say, right from making the pizzas.
Yes.
And then over the course of many, many years, actually there's plenty of opportunity for progression within that corporate entity.
Totally agree. And a lot of these guys and girls didn't go to university, didn't come from high economic families, but they've grafted away, and it's a business that if you work hard in, you'll be rewarded in. And the thing that I probably have focused on most in the last year is focusing on our customers, back to my original store, and really, we talk about customers for life. So what can we do to make sure that we don't lose a customer, which is easy to do in this business when you're delivering millions of pizzas every day that are made fresh on the spot for you and delivered to you. And at the moment, we're averaging 23, 24-minute average delivery times. So the moment you press the button to order to where you're at your house, they're pretty incredible times across the size of the business that we have, and we're very proud of those. So we're focused on the customer because we, again, like that little store I had at the start, is that we've got such large market share, we need to make sure we look after every customer. So the average customer only orders literally once a quarter. We think we can maybe get one more order out of them per year, which is why our big focus is on loyalty, et cetera, at the moment.
Yeah, absolutely. And I think that's quite a nice segue actually into your plans for future expansion of Domino's in the UK, because I would say, and you correct me if I'm wrong here, but I think you can summarise the different levers of growth really as being, quite simple actually: more stores, more customers per store, higher order frequency, as you've said, and higher value per order. And actually, in terms of how you look at the balance of those, where do you feel that the strongest lever that you can pull is? Yeah,
it's an interesting question, and probably hard to say. You wouldn't want to bank on any one particular one because I think that's too risky. I think they all play a part. I think value is the key message, right? At the end of the day, all of us are consumers and we all want good value. And value just isn't price. It's like if I got a pizza delivered and let's say it cost £12, but it took an hour and it was cold, that's not good value. I could pay £13 or £14. It was delivered in 20 minutes. It was hot. It was fresh. Someone served me really nice. The pizza tasted great. That's great value. So value isn't just represented by price alone, and I think that's part of what we focus on is the whole value equation. So loyalty, we're going to start. We've already started testing it. We've got some great data there. We'll start to roll that more towards later back end of next year. But in the meantime, our service times are way better than they have been. We're really focused on the customers. We're really consistent with our marketing. We've got 8, 10, 12 out there at the moment. We've got £4 lunches. So we're doing all these things. And also we're offering more choice from a health perspective as well, so that we have our cheeky little pizzas under 450 calories. We've got some more things we're looking at having on the menu. Just have people who want to have sort of a lower calorie option. It's there. We're never going to be a health food. That's not what we're going to try and be. But we can be better for you. And there's moments where it might be mum might want the 150 calorie item, and the teenage boys want the fully loaded pepperoni passion, which is what we all went through. So we want to cater for most people. Yeah.
What's your own personal pizza of choice?
I like a pepperoni passion on a thin and crispy with pineapple and jalapenos.
Wow, nice. And I'm guessing you have to do quite a lot of exercise to stay in shape eating that.
Luckily I'm a bit of an addicted person when it comes to sport, so I train pretty well every day.
Right, yeah. And then in terms of that data angle, I think that's really interesting for Domino's as an opportunity, and you've talked about how you could do a lot more with that looking forward. So digital disruption has clearly impacted the takeaway food market as well as other industries. You've had the rapid rise in popularity of the online delivery aggregator platforms, so Just Eat, Deliveroo, Uber Eats, which Domino's has embraced. But also there's that increasing opportunity to utilise that first-party data that customers are giving to you willingly when they're ordering to be able to hone a marketing strategy and become more efficient and effective that way. Is that something that you see as being critical to future success?
Huge. And to be honest, we've only really started tapping into those insights in the last sort of 6 to 9 months. We had an IT system that wasn't really up to providing the correct data or accurate data. Thankfully now, before my time, they started rebuilding that system and it's basically complete. So the data analytics team we have is quite incredible, and the insights we're starting to get on our consumers and how we can better serve them and know about them more accurately, because we have so much data. 90% of our orders are online, right? So we have their data. Obviously, we have to use it in a very sensible way, which we do. But yeah, it's the insights we're getting now are very rich. and that's going to help us make the right decisions for the future, etc. So I'm equally excited about that. We know a lot about the average UK consumer, and we're in every second household. We're in 13 million households order from us every year. So 1 out of 2 households orders from Domino's every year.
Which is an incredible stat when you think about it.
It is. It really, truly is, which is one of the reasons, and it may be segueing too early for you, but one of the reasons why I called out that I think we have not only the need and desire for a second brand, but we have the infrastructure for a second brand. Not only do we have an incredible supply chain network, which is, as you've seen firsthand, and we're actually adding more automation to that and make it more efficient, but we have this 35,000 team members who are fully trained and employees. We have these incredible entrepreneurial franchisees that have great head offices themselves. We have an incredible head office team ourselves, a data analytics team. So we have all this data and knowledge and people. Let's synergize that. So if we can grab another brand that's already sort of maybe started and spent that startup capital, but has still a long runway of growth, that will help tick up the growth multiple that we don't have today, because people see us as ex-growth. Even though we aren't, I can see why some people see our market penetration and think, well, there's not a lot left. We think there is, but it's probably harder to get to be fair, than if we were only a 200-store business. So that's why we're looking at that.
Absolutely. And do you feel that is a decision or a direction of travel that has been generally well received by UK investors?
Not by everyone. You can see our share price at the moment is depressed. I think it's quite good value, which was great, the fact that we've been able to buy back during that period. But that's okay. I mean, everyone, they buy into a stock and it was only one brand, and then the new CEO comes and says, we want to do another brand, and there's risk attached to that. I completely get that. So I get that. So we are seeing some shareholders get out, but the good thing is that we're seeing some amazing shareholders come in that get that picture, get that story. And we have long-term holders like Lion Trust that we're really appreciative of, that get the long-term benefits of what we're doing. And if you think about the ride that you guys have had for the last 10 years, there's been a lot of shareholder money invested into commissaries, invested into IT. If you can stay in for the ride for this other brand, you get to see all those investments synergized and extracted value out of them for the first time, or for the second time, if you like. So that excites me. And the way I think about it is I want to set up the business so that when I'm not here, there's still got another 20, 30 years of growth. So all that second generation and all the young people in the head office have a long-term vision to stay with this business. They don't have to leave for growth.
I think it's refreshing to hear you say that, because I think something that's reasonably frequently thrown at UK investors is that they are somehow anti-growth, anti-ambition. And I sometimes think that's a bit of a misnomer, because of course there are investors out there who are more conservative in their approach. They have mandates which will push them towards being so. But I don't think that the UK investment market is anti-growth at all.
No.
They appreciate a measured approach to it.
Yep.
They appreciate discipline in terms of demonstrating a clear focus on ROI. But when I hear you talk about that, about investments that have been made in the past that are still being made, and the ability to leverage that for the next 5-10 years, well, as an investor with a long time horizon, I find that exciting.
No, I totally agree with you. And I think for us, we've got this great golden goose that produces a lot of free cash flow that we've been able to use to do buybacks, consistent dividend, investments. And we think that we can continue to grow that cash flow that will help us go into something else that will actually help grow the top line as well, which will then double down again. So you're going to have a lovely dividend secure stock with a great base that's also going to have strong growth potential. So to me, that's the best of both worlds. And I think the key word you said before, Victoria, was discipline. We are very disciplined in that approach. I know the history about this, this business going to international and getting it wrong and wasting a lot of shareholder money. I'm very cognizant of that. With my father being Scottish, I'm very much I'm not into losing money. I'm very focused on every penny. And I treat it as my own business. I do want to genuinely think about this as a long-term upside. I'm fortunate I've done very well for myself, so I don't need to make short-term decisions to line my pockets. I don't have to do that. So I can build the business in a nice, strong, long-term sort of mindset.
That's what we love to hear. And you mentioned buybacks there. I mean, clearly the market has been going through a period of significant volatility over the last couple of years. More and more companies are looking to share buybacks as an increasingly efficient avenue of capital allocation. Generally speaking, we're supportive of that if the company feels that there is opportunity to do so and they have a strong balance sheet. Does it frustrate you sometimes, the short-termism of the stock market? I mean, you've clearly spent time with Domino's DPE as a private business as well as a listed business. Is that a frustration sometimes, or do you see it as an opportunity?
Oh, look, I see both. You can't have one without the other, right? If you want the rainbow, you've got to go with the rain as well, right? And it's a bit like that. So there's benefits to being listed, there's downsides to being listed. Same with being private. We are where we are. I can't change that. I can only focus on the things that I can change. So for me, it's trying to articulate the story as clearly as possible. Yes, there's always a period where you're just trying to build the pieces behind the scenes, and I can assure you at the moment, maybe it looks like we're a duck on water and the legs are paddling fast underneath. Everyone's working extremely hard to create this large growth business, whilst ensuring at the same time that we don't ruin this great, strong cash flow business we have. I think one of the things I'm excited about when I look at other businesses in the UK who have great growth, but they spend hundreds of millions of capex. We're spending less than 20 million at this stage. And okay, maybe we'll spend some more in the future, but it'll be on the basis of getting growth. So we're very low capex. So our return on capital employed is quite impressive. So we don't have to spend too much capital to get the returns we're getting today. And return on capital is very important to me. So as it is to franchisees. So I always look through the lens of a franchisee. Is this something they would like to own and buy? So that's exciting.
And that's probably been embedded in you ever since you were a franchisee yourself.
Yes.
So before we finish, I wanted to ask you, if you don't mind, how you think of the concept of entrepreneurialism itself. Because I think some people see that definition of an entrepreneur as somebody who must necessarily have founded a business in the beginning and grown it right from those original roots. But I think it would be really difficult for people to look at your biography to disagree that being an entrepreneur absolutely can be somebody who's not a founder in the first place, but nevertheless plays a critical role in transforming a business, growing it, changing its prospects, and looking to the future to build from those initial beginnings.
Yeah, it's a great question. I think to me, entrepreneurialism is a mindset. I quite often didn't think of myself as an entrepreneur. I just thought of myself as someone who loved being business and loved growing businesses. So I think an entrepreneur is someone who wants to grow something and probably has a higher level of risk appetite, but on the basis of calculated risk. And I think that entrepreneurs are prepared to take the risk and have the courage to fail, which is not easy. And they quite often measure the downside risk of that failure. So I look at things and say, okay, what if the worst happens? Can I live with that? Is it going to bring the company down? If it is, we can't do it, right? That's the first rule. But if we do it and we just skin our knee, when it's not terminal, is it worth doing? Is the upside risk worth that small downside risk? So you're always calculating in your head. I think quite often it's about a risk calculation in an entrepreneur's head. And if you look, some entrepreneurs go too far and blow themselves up, and I would say that's reckless. But a lot of those people also came back from that and learned from that and became more successful. I don't see myself one of those. I've had small failures, but none of the failures have been able to had to bring me down. I can learn pretty fast. And I'm also a big believer is you don't only learn from your own failures, you also learn from the failures of others. So I don't need to have to make the mistake to learn from someone else's mistake. So, yeah, I'm very calculated in how I take risks, but I have very much a mindset of growing. I want to grow things for the right reasons and grow them the right way, not just in a fast way, but in a solid way.
For the long term.
For the long term. And I think that's what we've successfully done around the globe. This is a great business, and a lot of hard work's been done here for the 40 years or the 38 years before I arrived. I just want to take what they've done and promote that legacy into a better place and leave it in a better place than when I arrived. That's my wish.
Absolutely. So I've got a final question for you, Andrew, which is a bit of a curveball. So you've clearly been very successful in your career, but I wonder what you'd say if I gave you the opportunity to exchange places with any other person in any other career just for a day. What would be interesting to you? Who would you exchange places with and why?
That is a very good question. I certainly wouldn't be a politician because I wouldn't make a good politician. There's some incredible businesses around the world. It's interesting. This one will catch you off guard. I referenced this the other day. We have a monthly team meeting amongst all our team and head office, and usually 400 people on the Teams call. And I got asked a similar question about what businesses do I admire. there's a small business in Amsterdam. This young girl started about the age of 25 in about 100 square feet, and she makes one cookie. It's a triple chocolate cookie. That's all she makes. That's all she sells. And this business turns over millions and millions of euros. She's just relocated to a bigger store. And the way that she's curated that business, the love and attention of rolling the cookies in front of you with her 3, 4, 5, now about 15 staff, the way that she's kept true and disciplined to that product, it's incredible. All right. So if I could work in that business for a day and just absorb all of the things, and I said to her in the early days, I met her many years ago when she first started, I'm not a huge chocolate fan. Any chance you could do a red velvet or a different flavour? She said, no, just only do triple chocolate. That's all I do. And I love that discipline, and she stuck to that. And it's a beautiful little business. So to me, I get inspiration from small entrepreneurs like that. That reminds me of what an entrepreneur is about, and it reminds me about our customers don't care how big our business is. They don't care that we sell over 100 million pizzas a year. That's irrelevant, really. All they care about is that pizza right now. Was it delivered on time? Does it taste good? Was it served by someone who cared about what they did? And was it well priced? Did I feel like I got reasonable value? One of the misconceptions is that we're an expensive brand. And if you look at the menu price, you'd say, okay, it's expensive. But only 2% of our customers actually buy off the menu. It's actually bought off coupons and deals, etc. So we're trying to break that mentality down, and we're succeeding. Consumers are telling us we're the best value since 2020. And things like £4 lunch, 8, 10, 12, Monday to Thursday are breaking that mentality and changing perception, which is what we want to do.
Yeah. Great product, great value, great customer service. It sounds easy when you put it like that, doesn't it?
It does. The actual Domino's algorithm is product, service and image divided by the price equals value. So we come back to that. That's the algorithm that's been around for like 30 years. Product, service and image divided by price equals value. And that's what we think about every single day.
Brilliant. Thank you, Andrew. So thank you so much for joining me. It's been such a pleasure chatting to you. And for our listeners, please do subscribe via Spotify, Apple, Google, or your usual podcast provider. As always, please remember, nothing in this podcast should be construed as investment advice or a solicitation to purchase securities in any company or investment product mentioned. See you next time.